Hello friends, welcome back. I am CA Rehman Bhamani and today we are going to discuss about the upcoming IPO of Anupam Rasayan India Limited. Whether you should apply or you should ignore this IPO, you will come to know by the end of this video. So first let's see about the company. So we are on the company's website and the company has written Anupam Rasayan India Limited is one of the leading company engaged in custom synthesis and manufacturing of specialty chemicals in India. So it is mainly a chemical company. Now let's see the IPO details. So the IPO opening date is 12th March and IPO closing date is 16th March. The face value will be 10 rupees per equity share. The IPO price is 553 to 555 per equity share. And the market lot is 27 shares. Minimum you have to buy is 27 shares. The listing will be on BSE and NSE. The total IPO size is 760 crores. Now we will be looking at red herring prospectus. This document is given by the companies before the IPO to the stock exchanges. So you can easily find this document on BSE or NSE's website. So we will go to page number 92 and we will see what are the objects of this issue, which means what the company will be doing with this money which they will receive through the IPO. So they are expecting to receive 760 crores. Here they have written in rupees in millions. So it is 7,600. What they will do? They will use it for repayment or prepayment of certain indebtedness availed by our company, including accrued interest of rupees 5561.96 rupees in millions. So 5561.96 million rupees they are planning to repay or prepay. The main objective of the money which the company will be getting through the IPO is to repay the loans. So one thing is clear, the company is having loan of this much amount. Now first thing that comes to my mind by looking at this is how much interest the company is paying. If the company has taken loans, it is obvious that it must be paying interest on that loan. So we will go to the profit and loss statement and see what is the interest payment. So we are on the profit and loss statement. Here you can find finance cost. Finance cost is nothing but the interest payment. So we are not concerned with this. We will look only for these figures 17-18, 18-19 and 19-20. This will give you whole year's amount. So here the finance cost was 453. This amount is in millions. So this is 453.20 million rupees. One more thing. So such a huge amount of interest the company is paying every year. You can see in 17-18 it was 139. In 18-19 it was 243. In 19-20 it is 453. So it is increasing every year. Now what I want you to see is earning per share. On one share, how much the company is earning. So in 17-18 it was 6.59. In 18-19 it was 6.60. And in 19-20 it was 6.94. So it is near about same. Like in 17-18 and 18-19 it was same. From 18-19 to 19-20 there is only an increase of 5%. Though the profit after tax is increasing. In 17-18 it was 413. In 18-19 it was 492 and in 19-20 it was 529. But because the number of shares are increasing, so the earning per share is remaining flat. I'll show you one calculation. So friends, this is a calculation which I have made from the latest profit and loss. You can see the profit after tax, PAT, profit after tax for financial year 19-20 is 529.75 rupees in millions. Everything we will be discussing will be in rupees in millions. if we assume that the company's earning is growing by 10%, then it will increase by 52.98 and the total profit after tax will come to 582. Okay. And one more thing, after the IPO, the company will be repaying all its loans. So the interest component which the company is paying right now, they won't have to pay it in the future. Friends, you are getting my point? The profit after tax, I have taken an increase of 10%. Let's say company increases its earning by 10%, and after the IPO, the company need not pay any interest because it will repay all its loans. So the new profit for the company will be 1035. Okay. For getting earning per share, we will have to divide this new profit by the number of shares. The number of shares will be new number of shares. So for this, we will do another working. Okay. The issue size is 7,600 rupees in millions, and per share price, the upper band is 555. So we will divide this 7,600 divided by 555. So this gives you 13.69, and number of shares before IPO is 86.21 million. So after IPO, it will be this amount 86 plus 13.69, which is 19.90. So the new number of shares will be 99.90, and the new earning per share will be 10.37. Okay, and the old earning per share we saw a few minutes before was 6.94. So if you ignore everything else and you just focus on earning per share, then there is an increase of 49%, which is very good if you just see earning per share and ignore everything else. But what is the PE ratio? The PE ratio is 53.52, which is very high. So what do you think? You should invest in this company or you should not? I would say the company is not growing. Why? Because the earning per share is not growing. We saw it for the last 3 years. The last 3 years we saw 6.60, 6.60 and 6.94. So it is not increasing. And now also it is not increasing because the company is growing. It is increasing only because the company is repaying its loan with the IPO money. So what they are doing is, in the simple language, simple Indian language, it is called jugaad. They are increasing the earning per share just by doing an IPO and repaying the loans with the IPO money. So from the long term perspective, I would say you should not invest in this company. Maybe you can get a listing gain. It can go up 5, 10, 15, 20%. But in the long run, 53.52 PE ratio is very high. If you ask me for listing gains or short term, I can't really say in the short term what will happen. But in the long term, I can surely say that this is a very costly price to pay. 555 per share is a very huge amount, because on one share the company is only earning 10 rupees, and for 10 rupees you are paying 555 rupees. So from me it is a no. See friends, I'm just saying you what my analysis says. I may be wrong, I may be right. You need to look out for yourself and do your own research. Do let me know in the comment section if you feel that I am right or I am wrong. Do comment and let me know what are your thoughts. Thank you friends for watching my video. Do hit the like button, share it with your family and friends, so they will also know why you should not invest in this company. And do subscribe to my channel if you have not yet subscribed, and hit the bell icon so that you will receive all the future notifications of my videos. Thank you.